The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome everybody to the basics of knockouts and binary options. My name is Todd Rich. I'm the head of education over at Nadex. Thank you for joining me today for this webinar. Let's go ahead and get into it. Before I go through this presentation, first things first, I do need to go through this disclaimer. I'm going to leave it up here for a second. And I am going to point out a couple of things. One, that trading does involve risk, and that all trading decisions are solely your responsibility and are at your own risk. The other thing I want to point out is I'm going to go through a little presentation today. I like to do that particularly for people who are brand new. And I like to have those slides up there. I'll even offer that if anyone's interested in the slide deck, I'll tell you where you can email to get a copy of today's deck. But then we're going to get into some practical examples. I'm going to jump over to the platform, and it's really important that when I do that, that you don't construe anything I say today as a buy or sell recommendation. I am doing this strictly for your educational purposes. So strictly for your educational purposes, I am not giving a buy or sell recommendation. So I just want to be clear on that. Now with that, let's go ahead and slide past the disclaimer. And I did, and I like to put this up front. And when we're done with the slides, I will have this slide back up. We are available and accessible to you here at Nadex. We want to help you any way we can. We want to make ourselves accessible. One way you can do that is you can email us at customerservice@nadex.com. In fact, you might want to screenshot this page if for reference. One, if anyone would like the slide deck from today, please email customerservice@nadex.com. And in fact, not only are we available to you then, we're available to you now. This is an interactive session. That's really important. You have a little questions box. In fact, if you want, you can even type a hello into that question box right now. I've got my colleague Sophie in the background who is ready to answer your questions. So if anyone wants to just type in a question or say hi to Sophie, please do so. And in fact, if you email customerservice@nadex.com looking for this slide deck, Sophie in all likelihood is going to be the one who responds to you, although it could be one of her colleagues on her team as well. The other thing I want to point out is trustpilot.com/review/nadex.com. If you feel compelled, we would love to get a review from you on Trustpilot. Everyone loves to get some feedback, and this is one great way for you to provide feedback to us is through that trustpilot.com website. We are also available across all social media. One of the things on social media I would definitely like to point you at is our YouTube channel. We record all of our webinars. We are constantly creating new content. If you haven't caught it, our chief compliance officer, I say that every time, our chief commercial officer, Travis McGee, does a 2-minute morning market update early in the morning where you can just kind of hear what occurred over the night while you were probably sleeping and what you might want to be looking at for potential hotspots in the markets. In fact, I'm going to be teasing it up as we're probably going to be expanding that offering where I'll be working with some of our analysts over at Daily FX, as well as some external educators in pre-cash market open for 15 minutes. We're going to try to do daily webinars that really kind of go through what's going on in the markets and where you might look for opportunity in Nadex products. So stay tuned for that because, again, we want to provide as much information, content, education, and commentary as we can to make you a better trader, to help you on your journey. All right, this is what we're going to go through today. I am going to do a quick little presentation to define knockouts and to define binary options. I'm doing that again for people who are completely brand new. We've got every week, we've got a bunch of new people joining our markets, and I like our knockout products. That's how I'm going to start today. And I'll definitely explain the difference between knockouts and binary options. A lot of people show up at Nadex specifically for binary options. We're going to be covering those as well. But the really cool thing about Nadex is it provides short-term trading opportunities with products that are designed specifically for retail customers to access and trade the markets. And that's kind of what we're all about, short-term trading. I am going to then jump over to the platform. We are going to go through some of the features on the platform. I'm going to be showing you some of the charting tools. I'll definitely be leveraging some of those and show you how you can navigate and use some of those tools when we specifically go through some examples of knockouts and some examples of binary options. And hopefully at the end, while I love the knockouts, I think they're pretty straightforward and intuitive. A lot of people really love our binary options. It's a unique product in the marketplace. I think everyone understands the concept of binary options once you kind of get familiar with it. And after I go through those examples, you'll understand much better the dynamics of how binary options are priced and how the price fluctuates. So it'll be fun. All right, and again, if anyone wants the deck, please email customerservice@nadex.com, or if you'd like, you can even tell Sophie in the chat or the questions, and I'm sure she'll hook you up afterwards. Okay, so let's go ahead and define knockouts. What are knockouts? All right, if it's a term you've never heard of before, a knockout is a contract that has a specific price range around it. Okay, I'm just going to start there. A Nadex knockout is a contract that has a defined price range. Now that price range, oops, there we go, is set between two price levels. All right, and there's two price levels. There's a lower one and a higher one. And the lower one we'll call the floor, and the higher one we'll call the ceiling. Again, pretty intuitive. And when I go to the platform and show you, you'll see it very clear, easy to understand. But it does have a knockout, a contract with a price range. The price range has a lower one that's called the floor and a higher one that's called the ceiling. And what will happen is the price of the contract and the value of the contract will trade between the floor and ceiling. And it's what we call a Delta 1 product. Now, what is that fancy Delta 1 term? It means the value of the Nadex knockout is going to move right in line with the underlying market. So, and again, when you see it, it's pretty intuitive. It's like when you trade stocks. Stocks are a Delta 1 product. You're trading a price of something at that moment in time. And so the price of the knockout will move right in line with the underlying product. And because of that, it's as simple as if you think the price of something is going to go higher, you buy it. And if you think it's going to go lower, you can sell it. Now, I know that might sound might not make sense to some folks. They're like, how can I sell something that I don't own? If you don't own it, how can I sell it? And really what you're trading is you're trading price action. You are trading price action. So with an Nadex knockout, you can sell it if you think the price is going lower. And if you think the price is going higher, you buy it. Now, why is it called a knockout? And a knockout can expire in two ways. There's either a price knockout or a time knockout. Now, when I say price, each one of these products, so there'll be a Nadex indicative index for that market. So whether you're trading Forex or stock indices or commodities, where we have knockouts for all those, and I'll show you what products we have knockouts on. If the price of the underlying index, all right, if the price of the index touches the floor or the ceiling, you get knocked out of the trade. That's why it's called a knockout. The trade settles right then. Here, I'm actually going to go back up. So if you buy a knockout and it goes up and it touches that ceiling, you get knocked out of the trade, and you would get knocked out of the trade for maximum potential profit. Now, if you bought a knockout and it went down, so oops, you were wrong, and it touches the floor, boom, you're immediately knocked out, the contract settles, and you would get knocked out for maximum potential loss. And the reverse is true if you sold it. So if you thought the price of something was going lower, you would sell it. And if the price went down and touched the floor, boom, you would get knocked out and you would experience maximum potential profit. Now, if you sold it and you were wrong and it went higher and it touched the ceiling, the higher price, you would get knocked out for maximum potential loss. So, and again, I'm going to show that to you. And on our Nadex trading platform, we make it very clear and very easy to understand what your potential maximum profit or what your maximum potential loss are before you even enter a trade. We show that to you clearly up front. I think you'll like it. And it's also clearly identified on our charts. Now, the other alternative, because that's if it expires by price, every knockout does have an expiration. Our knockouts are all weekly contracts. So at the beginning of every week, we list knockouts. And now, if it touches the floor or ceiling, and then one of the knockouts is settles, and that product is now over, we will immediately list another one. So there's always a variety of choice of knockout ranges for you to pick from. Now, let's say over the course of a week or in the period of time that you traded a particular knockout, it doesn't touch either the floor or the ceiling. Eventually, it will settle at the end of the week, and there'll be a settlement price. And if you never got knocked out of the trade because you never hit the floor or you never hit the ceiling, excuse me, I had to take a sip of water there. It will settle at a price, and your profit or loss would be the difference between where you bought or sold it, the price that you bought or sold, and where it settles. So if you bought it and it went higher and it settled, you would have some partial profit. If you bought it and it went lower and settled lower, you'd have some partial loss. And flip-flop if you sold it. Again, I will show that to you when we get over to the platform. It makes it very clear. So that's the basics of knockouts. I just wanted to explain. And again, if you want the deck, you can go back and review these. And then it always helps if you have that in front of you and then you start looking at the platform, or you review this webinar, which is being recorded and it'll be available on YouTube, as well as our website. It'll be in our archive section of webinars. You can go back and review and do it at your own pace. Now, what are binary options? Well, knockouts are delta one products. The price of the knockout is going to track the price of the underlying. Binary options are a little different. And again, this tends to be our most popular product. People love these binary options, and I get it, because not only are they cool, they can also be very fun. A binary option is a short-term, as I mentioned, everything at Nadex, short-term defined risk-reward contract. So just like our knockouts, they're weekly, but you can trade them short-term, and those are also defined risk-reward contracts. A binary option, similar, short-term defined risk-reward, but this is different. You're not trading the actual price, the underlying, you're trading something else. It's a binary option. It is composed of three components. All right, and it's a statement, it's a prediction. That's what a binary option is. And that prediction or that statement, The three components of it are the underlying market. So, and we have binary options on foreign exchange, indices, commodities, and even events. We had an event contract today with the unemployment number. We've got event contracts as well. So there's an underlying market, there's a condition, and there's an expiration time. And we offer a variety of underlying markets, as I mentioned. The condition is also known as a strike price or a level, and it's going to be phrased in the form of a question. And then there's always going to be a time, an expiration time, and we offer a variety of expiration times from 5 minutes to hourly to daily to weekly. So you have a variety of expiration choices for your prediction, and that prediction will be something like, for example, will gold be above a certain price at a certain period of time? So, and we're going to go through examples, and I think you kind of get that. It's a proposition. It really is a proposition. Will this happen? Will the price of this be above a set level at a certain time? Not will it trade above it, will it settle above it? Now, whether you buy or you sell a binary option, your risk is defined, right? And we calculate that on the order ticket up front. So you know getting into it what you could potentially make and what you could potentially lose. Now, while the price of a knockout trades with the price of the underlying, the price of a binary option will trade in a range from 0 to 100. So this price will have, there's 0 is the floor for a binary. It can't go any lower than 0, and 100. It can't go any higher than 100. That is it. So let's talk about that. When I say it's a proposition, it really is a true or false statement. Will an event occur, yes or no? That's why it's called binary, because there are only two potential outcomes. Okay? That's why it's called a binary option. Will this happen? Yes or no? If yes, if the prediction comes out to be true, the contract or the binary option will settle at 100. And if it's false, it will settle at 0. So if you predict something is going to be true and you buy it, it can go to 100. That's your maximum, between where you bought it and 100, that's your maximum profit. And if you bought it and it comes out false, it goes to 0. Okay? And you can also sell these. So you can actually predict that the statement is going to be false. Will gold finish above this level? No, I don't think that's going to happen. I'm going to sell it. Okay? And if you sell it and your prediction is right, it'll settle at 0. Hey, I sold it and then it went to 0. I made money. But if I sell it and the prediction comes out true, it goes to 100, I would lose money. Okay, so hopefully you get that. And by the way, I hate to use this as an example, but it resonates very quickly. Binary options are or a proposition or a prediction statement, and all of ours are around financial markets. But I don't want to equate it to gambling. But you do understand the concept. Yes or no? Will the Bears beat the Giants this weekend? Yes or no? Will the Bears cover the spread this weekend? Yes or no? And you can make a prediction on what you think is going to happen. This is the same here. We're in the financial markets, and we've got these. You can predict what's going to happen with gold, what's going to happen with the S&P 500, what's going to happen with the U.S. Aussie dollar forex pair. So when you are trading a binary option, because it trades between 0 and 100, the price that you're actually trading, you can think of it as reflecting the probability of the event being true. as determined by the marketplace. So if something is trading around 50, the market is pricing it as a 50% probability that it could be true, which means it's also a 50% probability that it could be false. If something's trading at 80, the market at that point in time is pricing the probability of that event occurring at 80%. It is 80% likely at that point in time, according to the market, that this statement is going to be true and it's going to settle at 100, which the converse would be there's still a 20% chance that this statement could come out false. And that's the market. And so it's, do I think this is going to happen? Yes or no? The market prices it, and if you're buying it, you think it's going to be true. If you're selling it, you think it could be false. Now, if you trade other listed options within binary options, things like time to expiration and volatility definitely get factored into the price of a binary option. If there's a lot of time left for expiration, because there's so much time and anything can happen in that time, the price of the option is going to reflect the probability or the possibility that things could change between now and expiration. And if there's a lot of volatility, that too will impact the likelihood of an event being true or false. So hopefully that made sense. I didn't do a deep dive into this. We do have webinars where we do a deep dive into binary options or a deep dive into knockouts. You can go back and look in our archive, or you can go on our YouTube channel. I highly recommend go to YouTube and subscribe to the page. You'll get notified whenever we put additional content out there, and we are publishing a lot of content. In fact, we're doing things daily, and we're putting more and more of it out there, and it's useful. Okay, now, one other thing I want to point out before we get into, we jump over to the platform and I start showing you examples where I think it really does help and it really will resonate. But an important rule when trading any product, it doesn't matter what you trade, but I'm going to make it specific to knockouts and binary options. Knockouts and binary options do have an expiration time. Okay, so yes, we're going to trade a product that either has 5 minutes, hours, days, or a week. Just because there's an expiration associated with the contract does not mean you have to wait until expiration to see what happens. So that's kind of the fun part or the interesting part, where you can make a prediction, and if you want to exit your position early, you can choose to do so. And you would do that to either to lock in profits or to manage losses or minimize or limit losses. So for instance, if you predicted something was going to be true and it starts becoming true quickly, and you bought something at, hey, I thought this had a 40% chance, the price has gone up and now it's a 75% chance. That's how the market's pricing it. I can wait until expiration and try to capture that last $25, or I can say, hey, thank you, I bought it at 40 and now it's trading 75. I'm going to go ahead and get out. I'll take a $35 profit. Thank you very much, and I'll reassess my opinion. Or if you are losing, I bought it at 40, the market went down, now it's at 20. I was wrong. You know what? I don't think this is going to happen. I'm going to sell it at 20 and minimize my losses and only lose 20, as opposed to waiting for expiration and potentially lose all 40. So you can manage your profits and losses. You can lock in profits early. You can lock in your losses or manage your losses early. So just because there's an expiration does not mean you have to wait for that. And that's very different than, say, hey, are the Bears going to win? Yes or no? And you say, hey, I think the Bears are going to win, and after the first quarter they're down 28-0, and you don't think they're going to come back. You're stuck. You can't go, get me out of this thing. With binary options, you can. Okay. I am going to bring this back up again. I have seen that you guys are putting a bunch of questions in for Sophie, and I'm glad. Please keep doing that. It keeps Sophie on her toes, which is important. And I'm sure, and I will take a peek at some of the questions at some point and kind of peruse through, because if you have a question, there's a high likelihood that someone else has the same question and they just either don't know how to phrase it or were hesitant to ask. And again, we are here to help you. We want you to be successful, and one of the best ways we can do that is if you let us help you. So, and the only way you can do that is if you ask questions, let us know. Okay, I am now going to change what I'm sharing, and I'm going to jump over to the platform. Give me 1 second here. Here we go. Okay. And now we should all be seeing that, in fact, we are. I just confirmed that. Okay, good. All right, so this is the Nadex website. We're actually really kind of proud of it. It's, we launched this new website this year. I think it looks pretty cool. If you were wondering, we do have a webinars section under learning where you can find upcoming webinars as well as review on-demand ones in our archive. You can also find the archive on YouTube. Again, I would encourage you to check out our YouTube channel. We do put up blogs. We do have articles and tutorials in our learning section. Please leverage our resources. If you've got any questions, you can quickly and easily find ways to contact us. And in fact, you'll notice that chat functionality where you can chat with us as well. We're trying to make ourselves available to help you any way we can. Let's go ahead and log in, and I'm going to log into the platform. And again, nothing I'm about to do is a buy or sell recommendation. I just want to demonstrate how you can look at knockouts and binary options on the platform. I am going to go into a demo account. Now, if you do not have a demo account, I would recommend you get one. It is a great way for you to, one, learn how to navigate the platform and get comfortable with the tools that are available to you. And two, you can practice trading a little bit and sort of get the feel for how these products work. Now, I will tell you that the demo environment, we are streaming and we are putting live data from the live into demo. However, your trading experience in the demo environment will not, absolutely not, be the same as it would be in a live environment. In a live environment, you could try to trade between a market if things are different because it's real money and there's a lot of people in that marketplace all interacting with each other. In a demo environment, you're only interacting with other people who are in the demo environment. So it's going to behave differently than the live markets, but we are looking, the prices that we see are the ones that you would see in the live environment. Okay, let me just take a quick little peek here. Oh, you know what? And these are some great questions. I see them coming in, and I am going to show you. I am going to, I'll put on a demo trade. I'll take off a demo trade. I'll even try to manage a demo trade. So we're going to have a little fun here now as we go through some of the platform. Now, if you've never been here before, we do have our products, binary options. There are also call spreads similar to knockouts, except if it touches a boundary, you are not knocked out of the trade. There's optionality with it. And there is a webinar done recently by my colleague, Adam McCaden, who is our product specialist. We did a little series on Nadex products. You can go back and review the call spreads webinar. I think it was just done a couple of weeks ago. And then we've got knockouts. Now, I'm going to start with knockouts because that's what we started with initially. And as I mentioned, it's a Delta One product. And by the way, this is your workspace. This is where we'll see the chart right in the center and your positions pane down here. And we will get into that as well. think gold was actually kind of an interesting one, a product today. So I am going to show you though that we do have indices for knockouts. There are 4 of them. They're all US indices. And whenever we have a knockout, there are always 4, or we try to always keep 4 knockout products available. We have them in foreign exchange, okay? And you'll, again, four knockouts in each one of these. And then in commodities, and we've got, we initially launched gold and crude oil. We very recently, added silver and nat gas. And as I mentioned, I think gold was kind of an interesting one today because it's been on the move. Weird that we're, you would think it's a hedge against inflation and we're seeing a weaker dollar, but we're also seeing, I think gold was down today. So I'm going to go ahead and click, and it doesn't matter which knockout I pick. I'm going to pick any one of these to populate a chart. Okay, because that's all I wanted to do. And I'm now going to go down here and I'm going to hide that. I'm even going to hide my positions for right now. And let's take a look at, and it was, gold has been down today. I'm going to, this is actually perfect. All right, we've got a chart here. One, you'll notice that there are 4 blue lines on the left-hand side of your chart. Those are the 4 knockouts. That's why I say it didn't matter which one I picked. If I wanted to choose a different knockout range, I could simply click on a different blue line. All right, if I wanted to choose the one down here, I could choose this one. All right, let's pick one. Actually, you know what? I guess, there we go. Now it's on the chart. But let's pick one that is right here. I'm going to make this a little bit bigger because I want people to be able to see what I'm doing very easily. Now, when I click on this particular, well, let's even, I like this one. I like this one right here. Let's have a little fun here. Okay. Notice when I click on this knockout, okay, one, very clearly on the chart, it identifies your floor and your ceiling. That is also on the order ticket. All right. This particular knockout range is 1893 to 1943. Okay. And it tells you that it expires at 1:30 at the end of the week. These are always weekly. So this expires in a day. Today's Thursday. This will expire tomorrow on Friday. Now, if I thought the price of gold were going to go higher, I could buy this contract. And notice the indicative price, 1902.48, is right in between where there's a bid where someone could buy it. I could sell it at this price, or 1902.50, a price where I could buy it. Now, I'm going to go ahead and I'm just going to buy one for fun. I'm just going to go ahead and buy and place that order. I just wanted to get a trade on, and I'll explain why in a second. Okay. Notice when I put that trade on, and I honestly hit buy, and of course it's immediately going down, and I'm losing money. But it showed up in my positions page. Okay. And let's say I wanted to buy one more, but I wanted to buy a little lower, to maybe the dollar cost average. I could put in 1901. Okay, down below, I'm going to place my order, and you're now going to see, by the way, it popped up. It shows me that I placed an order to buy another one of these, and here we go. I mean, you can see I'm trying to buy one down at 1901, and right now I could buy it at 1901.9 because that's where where it's being offered. And I did put one on. It tells me I paid 1902.50. Okay, and then since I bought it, it's actually gone down. That's bouncing around in here a little bit. Okay, so I just wanted to show you how quickly and easily I could either place an order or place a trade. Now, let's go ahead and choose 1902. I'm going to choose 1902 because it's right in the middle. If I thought gold were going higher and I wanted to buy one at 1902, notice on my order ticket, it clearly tells me what my maximum potential profit and maximum potential loss are before I enter the trade. if I bought one at 1902, assuming I bought one at 1902, and I were wrong, okay, and it went down and it touched 1893, if it went down and if it touches 1893, I get knocked out of the trade and I would experience a $90 loss. I can't lose any more than $90. If this went down to 1880 or even lower, it doesn't matter. I was knocked out at 1893. So, I mean, I just made an assumption. I mean, and not a buy or sell recommendation. I thought gold was going to go higher. I told you I made that prediction. I bought one. If I'm wrong, I've got a stop loss down here at 1893. I know I can't lose any more than that. Now, if I'm right and gold trades higher and goes all the way up to 1943, all the way up here, I would get knocked out for my maximum potential profit of $410. So a knockout, it is a Delta One product. It trades right in line with the underlying asset. In this case, I'm looking at gold. If I think the price is going higher, I buy it. If I think the price is going lower, I sell it. I can certainly put a price to potentially try to buy it lower. And just like I bought one, I paid $1902.50. Remember, I don't have to wait until expiration to see what happens. And let's just have a little fun here. I told you I was going to do a little bit on the charts. Let's, and again, not a buy or sell recommendation. We do have tools available to you. We have a variety of technical indicators that you can populate a chart with. If you don't know what any of these indicators are, we do have this handy little I button that gives you some quick, tangible information and education on what that indicator represents. So for instance, if I wanted to put Bollinger Bands on, that just seems to be what I'm on right now, I can click Bollinger Bands and it will populate that. I didn't want to get rid of that. There we go. Boom. Yep. No, I had the other one. I had this one. Okay. Yeah, I want to make sure I'm on the same knockout. It put Bollinger Bands on here. And if I want to edit the parameters of my Bollinger Bands or how they displayed, I just clicked on this down here. And I can change how it's displayed. And there it is on the chart. If I wanted to do some drawing tools, let's go ahead and take the Bollinger Bands off. And I'm just going to take them off quickly, just because I don't want to confuse us. We have a variety of drawing tools where you can put in your own trend lines, your own channels, right? Quickly do Fibonacci retracement. Let's have some fun. Let's go ahead and click on Fibonacci retracement. Easy as 1, 2, 3. I'm going to look back over here. We can see we've been in a downtrend. So I would start in the upper left-hand corner where we were at the highs. I click once. I'm going to draw this line down to where we were kind of bottoming out. That's really kind of interesting, which is right where the floor of our contract is. I'm just going to put it right below that. And then 3, I can extend how far out I want it to go. So just 1, 2, 3. If I were in an uptrend, and in fact, if I had actually done this and started from here, I could have done an uptrend as well. But we're kind of in a downtrend, and that just kind of gave me some interesting levels. This 1893 level clearly seems to be some type of support level, but it's dropped through that. I'm thinking it's going to hold this level again. Not a buy or sell recommendation. If I'm wrong, I know that I've only got $90 at risk because I was trying to. In fact, you know what? I paid $19.50. Let's put the actual price in. I have $95 at risk, and if it were to bounce all the way back up, I could potentially make $405. Now, let's look at Fibonacci. Again, not a buy or sell recommendation, but it seems to be that this 50% retracement, this 1950 38 level seems to be rather important. I mean, we can see that it was a support here. It was a resistance. It was a resistance. It was a bit of a resistance. It was resistance. It acted as a support here. If I actually thought this was going to bounce back up, do I have to wait for it to go 1943 and try to capture all $405? No, I might only think it's going to come back to 1920 85. So maybe I want to put an offer to sell it up there. So I can, if I want, just put in 19, 20, 50, okay, which is maybe just 1920. That's a nice even round number, right? Where I'm kind of seeing, hey, I think it might get back up there. I want to make sure I'm selling it, right? Because I'm going to put an offer up above. So let's do that again. 1920. I can place an order up above. All right, I want to sell one if it gets up to 1920, and you'll see that in my orders panel. So not only am I trying to buy another one if it were to dip a little lower, I wanted to, hey, I'll take a second one. The one that I have, I'm prepared to sell up at 1920 and take a partial profit early. Again, if I want to. Otherwise, I could just hold out thinking, hey, I think it's going to get all the way back up here. Now, if between now and expiration tomorrow, this product, this knockout from 1893 to 1943 does not touch the floor. It never gets down to 1893, so I never get knocked out for my maximum loss. And it never touches 1943, so I never get knocked out for my maximum profit. The product will settle somewhere in this range. And my profit or loss will be, since I paid 1902.50. Okay, so since I paid 1902.50, this is where I bought my one. If it goes higher and settles up in here, I will have a partial profit. I will have some type of partial profit all the way up till 1943, at which point I would get knocked out for maximum potential profit. And if it were to go lower, right? If it were to go lower, but never touches 1893, I would have some type of partial loss. I would have something, I would lose less than $95, but if it touched 1893, I'm knocked out, maximum loss, $95. But if it settles below there, below where I bought it, 1902.50, but it doesn't touch 1893, I'll have some type of partial loss down to $95. Hopefully that was clear. Delta One product. And the nice thing here, let's go ahead and get rid of all of my drawing tools. And I've got nothing else. You can decide what it is that you want to do. I made an assumption that I thought gold was going to bounce. What if on your analysis, now you think this is, based on what's going on in the global economy, you think gold's going to continue to go lower? You can choose a different contract, all right? You can choose a contract and that's got a different range, okay? And here, maybe if I think it's going to go lower, I want to sell it. I think gold's going to just drop out. I could choose to sell a contract. Let's assume I sell it at 1902. Let's just put in a nice even number. If I were to sell this, and here's a different knockout, it's the 1863 floor, 1913 ceiling. If I were to sell this at 1902, okay, and I'm wrong and it does rally and it touches 1913, I would stand to lose $110. But if gold were to bottom out and drop, because that's what I thought was going to happen, I could potentially make $390 if it went down and touched this 1863 level. Now, again, you've got to make that determination. Do I think gold is going higher? Do I think gold is going lower? And you can choose the knockout that best suits your trade based upon where the floor and the ceiling are and what your risk reward appetite is. Right? Your risk reward appetite can be a little different. Right? And if you're not certain what that risk reward looks like, here's a different knockout level if you wanted to buy where you've got a little bit more room to be wrong. Okay. If it were to come down, I think it's going to come down, but I don't think it's going to hit 1883. But you're risking potentially $199. And if it were to, rally, which it's clearly touched this level up above, this 1933 above, that's where you would get knocked out for your profit of 301. You've got to decide where you would like to see your maximum potential profit, where you're comfortable with maximum potential loss, and you can buy and sell. And remember, just because there's an expiration doesn't mean you have to wait. You can always choose to take partial profits or limit your losses early. And I kind of showed you how we could do that. Now, that's knockouts. Again, hopefully, if you've had any questions, you've been firing those through over to Sophie. Let's now go over to binary options. I'm going to go up here to binary options, and these are different, right? Since I did gold, let's go ahead and look at a foreign exchange pair. Let's look at one that moves with gold, the Australian US dollar. It's a proxy for gold because Australia's economy is very much tied to gold mining. So let's go ahead and pick a contract that ends today, later today. All right, and I'm just going to pick a level and I'm going to hide it. And all right, let's go ahead and make this let's make it a 1 week chart. No, let's make it a daily chart. Let's make it a 1 day chart and let's give it 5 minutes. All right, wow. And this has been rallying today, right? And I'm just playing around so you can see some of the functionality. Here's the Aussie dollar. I'm going to shrink this in some so you can see some of the different binary options. Now this settles in 1 hour and 42 minutes. And remember, these trade between 0 and 100. And the price you see is the probability of the statement being true. So on this one, will the Aussie US dollar finish higher than 71.20? Right now, the market is giving it, if you look at the middle of this, it's about 68. 67, 68. There's a 67, 68% chance that this will be true and this contract will settle at 100. If I think it's going to be true, I can buy it. If I were to buy it, let's just put in 68. Okay. Let's say I were to buy it at 68. I would be risking $68 because what could happen? This could be false. It settles below. And remember, it's binary. It's either 0 or 100. If I bought it at 68 and it is a false statement, it settles below 71.20, this contract will settle at 0. I will lose the $68 I invested. But it's a higher probability. The market's giving it a higher probability that that's going to be true. If I thought it was going to be lower, I could sell it. Let's say I sold one at 68. I think, you know what? It's above this level right now. Here it is. It's at 71.24. But I do think it's going to sell off down below 71.20 in the next 1 hour and 41 minutes. Notice the red on the chart is where I would need the contract to settle for this to be a profitable trade. If I sold this at 68, right, and it went to 0, I could potentially make $68. That would be great. But this would have to drop and settle below there in the next 1 hour and 40 minutes. If I sold it at 68 and it stays above 71.20, I'm wrong. It goes to 100. So I sold it at 68. It goes up to 100. I would lose $32. Okay, so I know getting into the trade, my maximum potential loss, my maximum potential profit. Now, if I sold this at 68, if you notice, all of a sudden, look at this, this is coming down. If I sold one at 68 and the price of the probabilities, and this becomes a 50 proposition, this goes charge trading 50, I could buy it back at 50 and make $18 and be done. A lot of successful traders will try to maximize losses and minimize losses and not necessarily wait until expiration to see what happens and trade. I mean, these are short-term trades. Now, again, this has got 1 hour and 40 minutes. Now, what I would like to show you, and I know I'm going a little longer than I would normally go, but I really like to do this. One way to really see the price of binary options, how much time do we have left here? Oh, perfect. We have these 5-minute binary options, and I want you to see one. Let's go to the Aussie US dollar, because I want you to see how quickly the probabilities of these can change as you approach settlement, as you get closer to expiration time. This is a 5-minute binary, okay? Short-term price action. This contract is going to settle in 4 minutes and exactly right now, 3 minutes and 58 seconds. And we've got these different levels, and you can see it is currently above the 71.23 level. And if I thought it was going to stay there, I could buy one. And right now, the market's pricing it around a 65% probability. And as this ticks higher, notice how the probability on this all of a sudden jumped up into the 80s. Look at this one. If I think this is going to keep going higher, let's just try to, I just bought, did I get one? I tried to, oh no, there I am. Remember, I'm in demo. I did buy it. I bought it at 37. I thought maybe we're going to keep spiking higher. Notice how I've got this. I could be wrong. I bought one at 37. When I bought it at 37, the most I can lose is the $37 that I paid. But if it does make it above 71.25 and settles above 71.25, I would potentially make $63. Now, as time gets closer to expiration or settlement, these probabilities are going to change as the price of this fluctuates. The probabilities are going to change very quickly. And the reason they'll change very quickly is because in the end, all of these will either settle at 0 or 100. Now I can see the price of, in fact, I don't want to do 5-minute ticks. I want to do, no, let's do 1 minute. There we go. Here we go. 1 minute. We've only got 2.5 minutes to go here. Okay. And notice I paid 37 for this. It is now trading right there at 71.25, and this is around a 50% probability. Now, I don't know what's going to happen. Maybe I just want to go ahead and take some profits, and I offer one at 55. Now, my order's in there, and it's, oh, look, it's ticking down. I might have missed my chance. I can go down to my order. I was trying to sell this one at 55. I'm going to click on it again, and I'm going to make it 35. I'm going to amend my order. Oh, and I sold it. I got out. I went ahead, I bought it and I sold it. Okay. I got in and out of that position. And I just wanted to show you that you can do that. I can either try to minimize my losses or maximize my gains. Notice now that I no longer have that position. I sold it at 35. Now, I don't know if that was a good or bad thing. Notice now it's trading a little bit lower, but we've got 1 minute and 8 seconds. And again, all of these, these are showing at about 100% probability. I mean, this is pretty high that it's going to stay above this level in the next 58 seconds. The probability on the one up here is pretty low, right? And if I now think there's no way it's going to rally back up above this, if I wanted to try to sell this, yeah, I tried to and I couldn't even sell it. I missed my chance. Let's go ahead. Oh, I just did sell it. I got another position back on. I sold it at 14.25. All right, and you're seeing how quickly the price of these probabilities can change. Now, this is what I wanted to show you, and we might have missed it. Notice when there's only 17. Now I sold this one at 14.25. Notice how the prices went blank with 20 seconds to go. That's because no one really knows what these are what's going to happen to these. And as we go, boom, it expired. The one that I sold at 14.25, it settled at 0. Notice my position is gone, and I kept that $14. And I actually, in less than a minute, I made $14 by selling something I didn't think was going to happen. Now, notice when we started over again, our clock reset to 5 minutes, and the probabilities also all reset. And so if you're looking for some very short-term price action, look at this. This is around 50% probability as this thing keeps going down. As the Aussie US dollar continues to tick lower, these probabilities will change, as will these, as will the ones below it. And you can buy or sell these probabilities. If I think this is going to keep going lower, maybe I can sell this. Maybe I even sell this one because I think it's going to come all the way down here. Now, do I have to wait until expiration to see what happens? Again, no. I can sell it. I can buy it back. I could buy it. I could sell it. You can trade these as the probabilities move. And the reason I wanted to show you these 5-minute binaries is you can see how dramatic the price and the probabilities are as you approach expiration, which is why a lot of people will take their positions off before settlement so that they don't get surprised. Where a winning trade that you think you're going to make money immediately becomes a losing trade because in the last few seconds, something happened and it moved very quickly. So I wanted you to see that. This was an intro to knockouts, a delta 1 product, and binary options, a probability, a prediction. Is this going to be true? Yes or no? All right, and I want to jump over quickly, and I want to take a peek at some of the questions because I want to make sure that I got to all of them. And I love it that you guys were keeping Sophie very busy in the background, which is always great. And I think she got to all of your questions. Oh, and by the way, where did I get the percentages on my chart? Okay, so on the charts, the percentages that I'm seeing, let's go ahead and I want to get out of 5-minute binaries just because they move so quickly. Here, let's take a look at the daily NASDAQ. Okay, the percentages one, the prices I see are the probability of the statement being true or false. So those are my percentages. Now the other percentages I think you were asking about, and I'm just going to do this again. I happen to like this little tool. It's one of our technical analysis drawing tools. Let's get rid of, hang on, give me a moment here. There we go. I wanted to get a little bit more real estate on the screen. This is the NASDAQ, and on our charts in the upper left-hand corner, we do have, you can customize the date that you want to have your chart. You can have the time frame. We have technical analysis indicators. I think the one that I was showing you that you saw was a drawing tool. And here, I'm just going to give you 2 quick drawing tools. Let's first start with a channel where you might see a trend where I started in the, and you can draw a channel where you might see, hey, I'm seeing an upward trend and there's levels where I think I might see where there might be support or levels where there might be resistance. I'm not sure that's actually the right channel I'd want to draw, but I just wanted to show you you can fit a channel to it. The one that you were asking about on those percentages was a Fibonacci retracement. If you're not familiar with Fibonacci, again, we've got some information here. It's a natural occurring ratio. It's something we see in nature. You see it in animals. We see it in the human body. We use it in architecture, and it is a ratio, and people tend to look for this pattern in the financial markets. If I click on Fibonacci, I'm going to show you, I'm starting in the lower left-hand corner. I click once. I'm showing an uptrend. So I click and, I'm kind of fitting it here, and I click in the upper right-hand corner, the second one. And then if you want to do a third click, I'm extending it to the right to make it a little longer. And what Fibonacci says is you might see support and resistance at these natural ratios. So, and interestingly enough, you kind of do. I started in the lower left-hand corner, and at the 76.4 level, you did see, right around in here some semblance of a place where you might see a pivot, or where you'll either see support or resistance. As we kept going higher, I mean, it doesn't, this 50% retracement was a level. And notice when I did that, it did give us a level all the way up here. Oh, and I'm grabbing the whole chart. I need to grab, there we go. It does give you these price levels up, and it tells you, hey, up here it's 1643. There might be some type of resistance. That's just Fibonacci. I'll let you go and look on your own, but that's how I put those percentages on there. We went a whole hour today. I went longer. Hopefully you enjoyed this session. Again, we're here to help. I'm glad that you were typing in questions to Sophie. Please take a look at our webinar section to identify upcoming webinars that you might want to join us on. Please go to our YouTube channel and subscribe. Take a look at all the content we've got there. Thank you for being customers over at Nadex. And I want to wish you all good luck in the markets.